for the members. No face cam because I don't know, but I'll just have this video up for forever, and then I'll like add to it, make separate videos if I want to add anything. But I'm just gonna go over kind of what I look for every morning and how I trade, how I see the markets. Obviously, like, you're gonna need a lot more experience to see the markets the way that I do, but this is kind of just like some kind of like it's kind of like just what I look for every day in simple terms. It's a lot more complex than just these. Like, you have to see it real time in order to really understand. But I'll show you some real time examples from this week. But this is just, I'm gonna just go over it real quick. So number one thing is actually, you know what? I'm gonna change number one. Okay, well, I already started the recording, but whatever, it's fine. You guys will just have to see this. So we'll go 0.5, right? So day of the week. So this is for me personally. Obviously it applies to me personally. It doesn't have to apply to you, but number one is the day of the week, right? According to the economic calendar, you want to be trading on days that have the highest probability to have clean price action. So that would be towards the middle of the week, Tuesday to Thursday mainly. Days with high impact news, so red folder news. And yeah, so you want to focus on those days. You can trade Mondays and Fridays, but just be wary of those, be cautious on those days. So that's number one thing, right? And then now we can go on to the real number one. So what is higher time frame reaching for? So basically, this is just what is the higher time frame narrative, where is price likely to draw towards on the higher time frames, because everything works from the higher time frames. And then as the lower you go, yeah, basically everything just works from the higher time frames, right? So the higher time frames hold more power than the lower time frames. So weekly is like the main one, but that is like your weekly target won't be hit till like towards the end of the week, so that's mainly for that. Daily, you have like daily highs and lows. Every day, every single daily high and low has liquidity, so you want to be watching those. 4-hour chart, 4 hour swing highs, swing lows, for value gaps. Same with the hourly and the 15-minute. And then so yeah, just basically frame your higher time frame narrative. And I think that's the most difficult part is, just being on sides of the market, being able to see where price is likely to draw towards. I think that is probably the most difficult out of all these steps. But that'll just come with time and experience. You'll be able to tell which direction price is likely to go towards over time. And also, if you're in my group, seeing me live trade every day, seeing what I look for and how I read price, you'll be able to get in sync with price a lot more quicker and often. Number two is wait for manipulation in opposing direction of higher time frame draw on liquidity. So let's say that I have a 15-minute fair value gap that I want to see hit. So I have a 15-minute bullish fair value gap that I want to see. Okay, this is I'll show examples. I can't really like draw. I'm not going to draw it out right now. But basically, you want to see manipulation in the opposite direction. So if you're bearish, you want to see some kind of buy stop run. So I can draw it out real quick actually with this path. So if I want to see price drop, right? I want to see something like this. I want to see a move up first before the drop, right? And then I want to see us start dropping down after that. But I want to see that manipulation first before we start dropping. That's basically what I mean by manipulation in the opposite direction. Manipulation can occur as early as 8:30 a.m. So it doesn't have to be at 9:30, but I like to see it happen around 9:30 to 10. So that opening range between 9:30 and 10, that will be your 9:30 Judas swing. But the manipulation can happen before 9:30. So like from 8:30 to 9:30, if we have some kind of manipulation, it can happen before 9:30, so you have to be aware of that as well. After manipulation, find PD array that gives price narrative or the why, basically behind why price should move to the higher time frame draw on liquidity. Some example PD arrays are new week opening gaps, new day opening gaps, opening range gap 50%, RTH liquidity, which is just regular trading hours liquidity, fair value gaps, wick midpoints, order blocks, stuff like that. Just PD arrays in general. My personal favorites are fair value gaps and opening range gaps and regular trading hours, highs and lows. So I like fair value gaps. So say we have like say we have a 15-minute, say I'm bearish, and we have, where is it? There it is. So I'm bearish, right? I want to see price go lower, and we have something like this before 9:30. So and then 9:30 opens, and then we come up, right? Take out buy side, which is this high right here. So we take out buy side, and then we tap in to this 15-minute CIBI. Right, so we tap into that 15-minute fair value gap after taking buy side. So that is what I mean by the PD array that gives narrative, that gives price narrative why it should move lower. So after taking out buy side, that's not really, for me, that's not enough of a reason for price to want to go the opposite way. I need to see some kind of PD array. And for example, like this 15-minute fair value gap, how we take out buy side and then we tap into the fair value gap, and then that is why price should drop lower if I'm bearish. I hope that made sense. I'll go into the charts and see if I can find some better examples, but that's pretty much it in simple terms. And then after that, after we have that manipulation, find my entry model, which is the 2022 model. So I wait for 1 minute structure to shift using the 2022 entry model and enter on fair value gaps if time is on my side, meaning right before or during a macro. So my favorite macro is usually the 950 to 1010 macro. If I don't find anything by then I'll wait for the 1020 to 1030 macro. And then if missed, 2022 model entry for value gap due to time not aligning. So let's say you get a 2022 model like at like 9:35. If you miss that like original 2022 model entry, then I allow myself to wait for the silver bullet continuation for value gap. So I allow myself to enter later on during the move. So yeah, that's pretty much it for like the basics. And then I have some chart examples if I can find them. I can show you guys real quick. So this was Tuesday. We'll go over Tuesday real quick. This was yesterday. Like this stuff literally happens like every day. You just have to be able to see it. So this is Tuesday, right? We had news at 8:30. So let me mark out the time. So 8:30 to 9:30. Okay. So as you guys can see, right? Overnight, over London, Tuesday, London session, 2 a.m. starts right here where my cursor is, right? What do? We rally up all night, all the way to previous week's high. So right there already, that is a Judas swing, right? We have previous week's high taken, so we have buy side taken, and then right before 9:30, we have this run up right here. We have this run up. It starts at 9:27, so it starts before 9:30, but once 9:30 hits, we take out previous week's high one more time, as well as the news high, so boom, right there. That is your Judas swing, right? So that's your Judas swing, and then boom, we shift lower, 2022 model, right there, right at 9:30. Bearish for value gap. And then right before the macro hits. Right, so we have the macro right here, 950. You could have entered on any one of these wicks, 948. 940 to 950 is usually where I find my entries. So I'll enter before the macro, and then the macro usually like begin the move. So yeah, that could have been an entry right there. And then to targeting, right, 15-minute BISI. That's why I drew that out. And then we also have the new week opening gap. That could have been your target, as well as these London lows over here. So there's multiple targets that you could have taken. Whatever you're comfortable holding for is what your target will be. And then we also have another setup, right? So aside from that setup, right, that was a good setup right there. Aside from that, so let's say we just start at 9:30, right? Nothing before 8:30. I mean, nothing before 9:30. Actually, let me see if I can go on regular trading hours and show you. All right, so yeah, this is fine. We'll do this. Let me see what the opening range gap was like. Okay, where's the midpoint? There we go. All right. So boom, right? 9:30 opens. What do? We drop. So there's your Judas swing, right? Where do we stop? 15-minute fair value gap from the overnight price action, but what else do we have on the regular trading hours? Opening range gap, right? So this is your opening range gap from the previous day's close to the current day's open, right? Find that midpoint, and what do we have here? Look at the bodies. Look at the bodies respecting that, right? So boom, we have that 15-minute BISI after taking out London sell side, which isn't shown here because we're on regular trading hours, and we have the opening range gap midpoint that is being respected by the bodies. So what do? We start running higher. We have this order block right here, and then boom, there's your shift in market structure, right? So then what do we have here? Fair value gap. Now obviously, this is hindsight. You could say this is cherry picked, but I'm just trying to help you guys see it, because obviously when you're first learning, everything that you see is going to be cherry picked in hindsight. Everything's going to be hindsight because that's the best way for you to learn, is seeing it for yourself, seeing it happen. So there's your silver bullet 2022 model fair value gap. Because look, if we go throughout here, no fair value gap, no fair value gap, no fair value gap, no fair value gap. There are no other fair value gaps on this run up except for this one. And then we drop down, take out sell side right here, drop down into that fair value gap, and then run back up for the 930 high. So that right there could have also been your setup, right? So there's two setups right there that you could have, taken based off the model that I just gave you guys. So yeah, that was pretty neat. Let's go to Mondays, because we also have something from Monday as well. Alright, we'll show electronic trading hours first. Okay, why are there so many lines on my chart? What the hell? Alright. Let me get rid of this. So boom, we have Monday, right? Monday of this week. So right at 9:30, what do? Sell off heavily, right? Into where we have a daily inversion for value gap that we hit. I don't know if there was anything else on the higher time frame. I don't want to spend too much time on here. Okay, we have sell side right here, right? Sell side, boom, from Thursday's PM session low. So there's sell side right there. I'll just mark that out for you guys real quick. Let me go back to the 1 minute. Let me scroll over back to Monday. Okay, boom. So we take out sell side, right? Form a fair value gap. Boom. That could be your entry, but I like to wait for a better read. I mean, I like to wait for that 2022 model fair value gap. So we displace higher, come back down into this first fair value gap, and then boom, we run up, create another fair value gap. There's your entry, right there. Aiming for equal highs. We have a whole bunch of buy side up here. There's your buy side right at 9:30 buy side, and then you have equal highs up here as well, and then you have small little fair value gap right there. So boom, there, that would be your entry. Enter there, stop loss below the wick, the candle wick, targeting these equal highs, fair value gap. There's your 1 to 3 right there. And then after that, after this run up on buy side, so you could have seen this drop lower as your Judas swing, or you could have seen this run higher as your Judas swing. Because after we have this run on buy side, 10:20 to 10:30. What do? Run on buy side, market structure shift, right there. Fair value gap, entry, 2022 model, right there. So I'm telling you guys, this stuff repeats every day. You just have to, you have to be able to see it real time, and that will take some time to, be able to first be able to see it real time, and then secondly, being able to trust yourself enough to, execute on it real time. It's going to take a while, but once you start seeing it over and over again, then you'll become more accustomed to it, and you're not always going to be right. That's another thing. This model is not 100% win rate. You're not always going to be on sides of the marketplace, and the markets are not always going to be in the best conditions, and you may catch yourself getting chopped up, which is why you have rules in place. So this model does repeat every single morning that I've seen, and there are mornings where, I'm off sides and I take a loss, and then I see it after the fact and I'm like, oh, okay, I should have done this. But, at the end of the day, it's still there. So this is just, a simple model to look for. If you don't have a model, you can try this out and see if you like it. This is what I use every single morning. So when you see me live trade, this is what I'm using. This is what I'm looking for. And yeah, that's pretty much it. If I have anything else to add on to like what I forgot to say or anything, then I'll just make a separate video. As far as like some people may be wondering like where do I put my stop loss, where do I put my TP? So for when you're trading a fair value gap, you want to have, let's say I enter on this one, right? You want to have your stop loss at the wick of, or at the low of the second candle. So a fair value gap is a 3 candle formation, right? First fair value gap, second fair value gap, third fair value gap. So you want to have your stop loss below the second fair value gap's low if you're bullish, or say if you're bearish, you take this short. You want to have it at least above the second wick, the second candle's high. But for me, I wouldn't be comfortable placing my stop here, right? Because this is a very small fair value gap, so I'd be more comfortable placing it above the third candle or the first candle's high. So it's, again, like it requires experience, for stop loss placement and your take profits. But over time you'll start to see it more and see like where a reasonable place for a stop loss is. Like this right here is a reasonable place for a stop loss. This right here is kind of reasonable, like it makes sense, but like again, you're gonna have a very, very tight stop loss, so I wouldn't be comfortable having a stop loss there. I'd put mine up here. Again, it's also just what you're comfortable with. That was another nice trade, 1 to 6, and yeah, targeting this low, 930 low. So that's, I don't know if I explained like stop loss placement and take profits very well. Your take profits is really just dependent on you, how long you're comfortable holding your trades for. For me, I like to hold my trade all the way to my final target because that's what I'm comfortable with, and 9 times out of 10 my final target does get hit. So I'm comfortable holding mine. If you're not comfortable holding it, you can always take partials and have a runner for that final target. But the targets I mainly look for is opposing liquidity, opposing fair value gaps, stuff like that. That's really it. Targeting, liquidity, and fair value gaps. But other than that, that's pretty much it for this video. I don't know. Maybe I'll upload this on YouTube. I don't know. We'll see. We'll see what I decide. I'll decide whenever I stop recording. But this is mainly meant for my Discord members who watch me live trade every day, so that they can understand what's going through my mind. Because I know sometimes I'm too busy reading price and I don't really like explain what I'm seeing that well. So this is just kind of give you a baseline of like what I think or what goes through my mind every single morning I trade. So I hope you guys enjoyed. If you have any more questions, you can just ask me in the members chat, and then I'll answer. And then yeah, if I have anything to add to this video, I'll make a new one and like call it like Blaysian 2024 model part 2 or something. I don't even know what I'm going to call this model. I have to come up with a cool name like how ICT does. But yeah, that's pretty much it for this video. So if you have any more questions, like I said, put it in the Discord and I'll answer it. And with that being said, that's it. So be safe.